Time to talk real estate, and Ozzie Jurock joins us. Hello, Ozzie.
Hi, Randy. We finally have our summer back.
Yes, we do finally have our summer back, exactly. The big news, of course, in the real estate market, as everywhere today, is this debt crunch and the U.S. subprime mortgage fiasco and how Canada is going to react. And you have some pretty important tips for people today.
Yeah, I think it isn't just the subprime. I mean, let's face it, the U.S. subsidized the market, or liquefied the market with $40 billion. The Europeans did $400 billion, and they have little runs on the bank in England with people standing around the bank. So what all that will mean to us locally is that credit is going to be tighter, all kinds of credit, but particularly marginal credit. If you've got a good credit score and you have a normal kind of employment and so on, you're going to be fine. But if you're just a little off-center, like say the self-employed mortgage or the stated income mortgage, they're already very difficult to get. So that you have to allow a little more time for you in terms of the application. Make sure that you have a good mortgage broker that looks at all of the institutions. Commercial lending is much tougher. It's already much tougher, and it's going to be more costly.
So you're suggesting people arrange their loans now?
Do it now. I mean, even if you need it maybe in your business, even maybe 2 or 3 months from now, and the mortgage applications, your pre-approval, make sure you have it in writing, even if your bank manager is your brother. I mean, I think all the banks are looking, boy, we made some mistakes, we have some very bad loans, let's take a look at all the risks that we have, and guess what? They're going to make it much tougher, I think, down the road for us to get the mortgage.
Okay, now the last part, fixed mortgages for a longer term, because you think the rates are going up.
Yeah, right now they have been, of course, artificially lowered because we have this enormous worldwide debacle, and this morning it's 5.7%.
Yeah.
But I don't think they're going to be going that much lower. I'm much more concerned that I will be getting the money. So I'd get a 5-year term or a 9-year term to coincide with the U.S. election year, and I'd be comfortable and sleep. And particularly on your investment mortgages, you want to make sure that you have your mortgage rate fixed.
So a couple of questions that I have for you. For people who have variable mortgages, that sort of thing, open mortgages, should they try and close them now?
Well, if they're worried about qualifying down the road, yes. If their credit is solid and it's a 60 or 75% mortgage, no, you'll be fine. You'll be able to hold it over, and likely, certainly in the next 6 months or so, rates won't go higher. I'm just saying this was a huge surprise what happened this last 3 weeks. The trouble is so enormous that everybody's euphoric today, but we are not out of the woods yet. So that I rather sleep easy with my financing.
Okay, my last question then. I have 4 years left on my mortgage. Should I try and renew now and pay the penalty, or where do you think rates will be in 4 years from now?
4 years, I think who knows what they're going to be like. Alan Greenspan came out day before yesterday and said inflation is a much bigger problem, and you wouldn't be surprised to see double-digit rates. Now, he allowed that there might be several years for that, but just because there's a guru, Alan Greenspan's stature saying that. So. Okay.
And 20 seconds left to talk about a hot property. We're going to start doing this when you're on. You've got what looks like a pretty good deal in Hope.
Yeah, it's a 2-bedroom townhouse. It's $136,900. It rents at $685. It's an 11-year-old building, and it's only 2 hours from Vancouver. And so from an investment point of view, I think that's a good deal.
All right, Ozzie, thank you so much.
Thanks for having me.
We'll talk to you in a couple of weeks. If you have any more questions for Ozzie, or if you'd like to purchase a copy of his newsletter, www.jurock.com, or you can call him at 604-683-1111.